All right, Smooth 98.1 FM, love music, love life, and it's time to talk about your money, time to talk about your personal finances, because hey, it is time for personal finance.
And this is an interesting one because we're all looking 2023. We saw how 2022 dealt with us. And so for our personal finance and personal peace of mind, we're going to need to figure out how to make our money go further for us. And that means investments. And with investments, it's a smart game.
Oh, yeah, very, very smart
game. It's a smart game.
You need to play it right.
You need some strategies. And that why I'm very, very happy to say that we have got Efosa Aliyu, who's the head of investments with Sankore Global Investments, joining us for the next half hour. Efosa, good evening. Thank you for joining us.
Hi, good evening. It's good to be here.
Good to have you on.
All right, so we're going to need the download from you on how we're going to navigate these sharky waters so that we don't get our blood spilled in 2023.
Absolutely, that's what I'm here.
Wonderful. All right, so if you would like to join the conversation, we are streaming live already up on youtube.com/smooth981FM Lagos. You can join the live chat in the say something box. You just say what you need to say.
Say something.
Yes. You can also send your WhatsApp messages to 0809 440 981, or you can take things over to Twitter with the hashtag personalfinance981.
All right, so talking about investment strategies with Naira assets, let me start from the top. And by the top, I mean literally the top of the hierarchy in Nigeria. Speaking about President Buhari. Now, he says he doesn't own any investment property outside Nigeria. From a personal finance perspective, is holding 100% Naira assets a good investment strategy?
Well, I mean, just to give a very straight answer on that, that's not a very good investment strategy to hold 100% Naira assets. Over the last, as far back as I can remember, actually, the Naira has been perennially weak against the USD, for instance, right? So if you cast your mind back to maybe 2008, for instance, if you needed $10,000, all you needed was about 2.2 million Naira, No, as a matter of fact,
do the math for 2020.
Sorry, as a matter of fact, you needed about 1.8 million Naira, in 2012, if you wanted $10,000. By 2015, if you wanted $10,000, you probably needed about 2.2 million. Again, by the end of 2017, you needed about 3.6 million. Today, you need over 7 million Naira to get the same $10,000.
Absolutely.
Went from 1.8 to over 7
million.
So that's just to put it in perspective, really.
So someone from, let's say, 2012 who had kept some of their investments, some of their money in dollars and hadn't spent any of it would be sitting pretty right about now.
Absolutely. So without doing anything. So if that person took 1.8 million Naira, got $10,000, put it on their pillow, they're better off today. I mean, that investment essentially, or that money has grown by fourfold, and that's ridiculous. So again, that just highlights, that highlights the fact that it's important that you diversify across currencies, because again, we sit in a primary currency that has been perennially weak, and just going by indications, it's not likely to come off anytime soon. So the magnitude of weakness, could reduce. It might not get significantly weaker than where we're at, but the prospect that it gets stronger are quite dim. So it makes a lot of sense to have assets that ensure that you have some USD. At the end of the day, you are essentially hedging. So if you reverse the analogy that I gave, someone who had 1.8 million in 2012, today you are essentially able to get about $2,000, right? That's what you're going to be able to get with that. Yeah. But in 2012, you could get $10,000. So you have to bear in mind the fact that we are a very highly import-dependent economy, and the dollar is the global currency. So we are exposed to those vagaries. So if your currency is constantly weak against the dollar, it essentially means that your purchasing power just continues to slide, continues to weaken. So it makes sense to hedge some of your wealth, in USD, particularly these days where you have people who've got kids abroad and whatnot. In the same vein, if you're needing to send your child $1,000 a month, years ago, all you probably needed was 250K, 300K today. You're needing 700K to do that, So if you had some investment in USD, it just saves you that headache. It hedges your wealth and ensures that, you're on a path of sustainability. So, yeah.
Because right now you would be running when you were walking 10 years ago.
I'm telling you.
You don't need that. All right, now, Efosa, when the president was speaking, he seemed to be referring to real estate property. So what is your take on real estate as an asset class?
I think real estate as an asset class is, so it depends on where exactly you're playing, but I think speaking broadly, it's a solid asset class. I think one that has proven to be an inflation-beating asset class, if you will, because typically, real estate sort of moves in tandem with inflation. For instance, over the last maybe 3 years or so, we've seen real estate prices and the real estate sector essentially really, hot in Nigeria, particularly in Lagos. And we've had high inflation that has essentially accompanied that, right? You're also looking at rents. Exactly. Rents have also soared, so it is that asset class that tends to be able to keep pace, with inflation, right? It is that one asset class that, is usually able to sort of store value for you. And this cuts across, the globe, really, whether you're looking at real estate assets here in Nigeria, you're looking at Dubai, the UK, or the United States, for instance. And one of the reasons why, we saw real estate assets really, rise quite strongly over the last couple of years is the fact that, the returns in fixed income, for instance, became abysmally low. It didn't make any sense, right? So you saw, I think from the end of 2019, thereabout, you saw, yields essentially collapse, and then you saw real estate basically take off. Before that time, when you had 20% yields on one-year treasury bills, real estate was essentially, clobbered. You didn't see any very strong move because risk-free, you were getting 20% in a year. You just needed to give that money to the government and go to sleep. But once those yields started to come off and drop quite significantly, it then made more sense for people to take a bit more risk. And that's why you saw quite some money pour into real estate and essentially build up the value of real estate over the last couple of years. So real estate is, that asset class that still has really great potentials to essentially, keep inflation in check and store value for you.
All right. I mean, you've already, stated that real estate is a very valuable asset to have. So if one actually has the means, would you advise investing in real estate abroad?
Because when I heard you mention Dubai, I was like, I'm all ears.
Yeah, I saw how you perked up.
Right. No, so I mean, again, this whole idea about having a diversification currency-wise, right? If you invest in real estate in Nigeria, so for instance, maybe you bought a piece of property in Banana Island, 300 million a couple of years ago, and that property or real estate is worth probably $1 billion now. If you dollarize that, you probably haven't moved, right? So 300 million a couple of years ago was about $1 million, right? And then that house now is probably worth maybe 700-800 million, still $1 million, hasn't moved, right? However, if you had that house maybe somewhere in Dubai or in the UK, and you probably bought it at maybe $300,000, and it's now gone to maybe 450K, you've essentially made some progress on it because of the currency in which it is denominated. So again, it provides that ability for you not just to hedge against inflation, but owning real estate abroad provides the ability for you to own that real estate in a currency that is strong, that is stable, that is also then able to hedge well. So it basically is like a double whammy for you, where you're able to then hedge using real estate and also hedge using foreign currency, which would be USD, as the case may be. So absolutely, it totally makes a lot of sense to have some foreign real estate as part of one's portfolio.
That's an interesting one. All right. So do you remember, join the conversation, figure out what your strategy is going to be for 2023 as we talk investment strategies. Now, regardless of asset class, is beating inflation the one thing that should be at the forefront of every investor's mind?
I think it helps to beat inflation. At the end of the day, the reason you're investing is to create wealth, right? So if you're investing and you're consistently unable to beat inflation, you're not creating any wealth. You're not going anywhere. And that's why you see the sort of reaction in the developed world to inflation. Inflation essentially erodes wealth and it takes it away. And that's why you're seeing, the US Fed, for instance, has been really aggressive by hiking interest rates to try and bring down inflation, even if the economy goes into a recession. It really tells you how bad inflation is. And for inflation, in investments generally, there's a rule of 72, right? So if you divide, your current inflation by 72, it tells you the number of years it would take for inflation to double or for the price of something to double. So if you look at Nigeria's inflation at 21%, if you divide that by 72, it tells you that in 3 years plus, so which would be sometime in 2026, if things continue on this trajectory, the prices would have doubled. So the thing that you're buying for $1,000 today, if inflation continues on this trajectory, would be 2,000 Naira in 3 years plus, right? It also the same rule for how you want to double investments as well. So inflation really can be quite debilitating if it's not checked. And that's why it's important that, as an investor, where you really can, you want to be sure that you are able to, over an extended period of time, be able to beat inflation. If you're not able to beat inflation in a year, 18 months, that's not bad. But over an extended period of time, 4 or 5 years, your returns should be, inflation adjusted. So you should be able to beat inflation. If you are consistently unable to.
When we've got inflation like we have here in the high double digits, what are we looking at? How exactly, as just like, let's say as a retail investor, do you start thinking about beating that kind of inflation? Because it's not 4%. So.
Yeah, it's tough. Even for us money managers, it's tough, beating inflation. Again, there is a finite outlet of things that you can invest in safely, right? And for a number of them today, the kind of return that you get is still subpar, it's still negative if you compare to what inflation is doing right now. So you basically just want to ride out that storm for the period that you can. Like I said, I don't think that inflation will stay elevated this way for another 2 or 3 years. We certainly would have inflation moderate, particularly this year. Just really on base effect. So we're coming off of a really high base in 22, so it's, because of the impact of that base, we're likely to see inflation moderate downwards, in 2023. So essentially, I don't expect that inflation to really continue. And so that could provide some kind of respite or reprieve, if you will. But nevertheless, consistently, it's important that, one is able to produce returns that are better than inflation. Else, you really aren't building any wealth.
All right, well, we've got to take a quick break, but when we get back, still more on strategies in which we get to make investments and hopefully, fingers crossed, beat inflation for 2023. Efosa, it's been so interesting. Can't wait to hear from you on the other side. And of course, keep it tuned right here. This is The Smooth Drive, where personal finance is on till 5:45. So make sure you stay tuned and stay money ready, people. Stay investment ready for 2023. All right, we will be back in 40 seconds. I don't know why I like to count so much. I just do it for the mid. Just put the stop on the mid. No, you can get rid of it. We won't even use it because you'll move it to the outro. So just take it off and put it on the outro. Yeah, you can take off status symbols as well. Let me just confirm that.
What was Alex saying?
Oh, just that I had
We'll
been
back
cut
in 5
short.
seconds. All right, welcome back. It's still Personal Finance on Smooth 98.1 FM. We've been talking with Efosa Aliyu, the head of investments of Sankore Global Investments, and we've been talking about investment strategies with Naira assets, looking at 2023. So, Efosa, it's been a great conversation so far. So let's jump ahead, let's jump along, and continue to make sense of everything. Now, looking at the inflation in the country, which is over 20%, if I'm correct, at this point in time, double digits, as Sope said. Is there any hope of beating it with investing?
I mean, yeah, it's
Which
tough.
we had spoken about a little.
I kind of spoke about that earlier. It's tough to beat the sort of inflation that we have right now, particularly looking at the sort of yields that we've got on, particularly traditional assets right now. If you look at, fixed income yields, treasury bill yields, treasury yields late last year went into double digits, but they have, however, retraced back into single digits. As a matter of fact, there was an auction today. The 1 year paper closed at just slightly above almost 8%, really. So if you look at long end bonds or long tenor bonds, you're getting around 14% on those. So it's really tough. One of the probably more viable ways through which one can actually beat that inflation, maybe investments in real estate. Unfortunately, not everyone can do that, right? You have to have a certain amount of money for you to be able to go into real estate. So for the retail investor,
you came up with something very quickly. I just want to ask you this because this was a question that was on my mind, right? And talking about not everybody has that access to be able to just buy houses left, right, and center like your monopoly. But I noticed like some investment apps where people can kind of pool together and put their money in, let's say, a certain threshold, and then they are buying real estate with other people. What do you make of that?
Yeah, so that's one way to do it. It's essentially like a mutual fund type structure or pooling structure where people essentially own bits of real estate. So if a house is worth maybe 50 million, for instance, you could pull together maybe 300 investors that can bring in 100K here and there, 50K, 500K, and then they all own bits or portions of that real estate. And then the rental income that accrues also, they own part of that rental income. Also, the capital appreciation that comes upon that real estate also certainly accrues to them. So that's one way to look at it, but that's one way to go about it. Again, because of sometimes the lack of structure within that industry, a lot of care needs to be taken to be sure that you don't get into the wrong investments or things don't become illiquid. So for instance, you get into the real estate investment and you need to pull out your funds after a year. You're really unable to pull out because it's not like the stock market or the fixed income market where you can easily just go sell it. Real estate, you would agree, takes a bit of time to get rid of it. It's not exactly liquid. So that could pose a challenge, in that wise. But that's certainly a structure that would work and that can expose retail investors to the sort of protection or returns that real estate assets might provide.
Okay, good to know. So very quickly, I wanted to ask you now, if we're ready, we've got our money, we're looking to invest in 2023, what would the ideal portfolio mix look like for you?
I mean, that depends really on the idiosyncrasy of the individual. So you obviously have to start with the risk appetite of the individual and the way that you perceive of risk and the way that I perceive of risk might not be the same. So there are people who put 100,000 Naira into something and they don't mind that it drops to 80K at some points, but because they believe that it could go back to maybe 120K, right? So those kind of people want to take on a bit more risk, while there are those who put 100K in something and they don't even want it to drop to 99.9K, right? So those sort of people are unable to take or stomach any kind of risk.
Risk.
Exactly. So the sort of portfolio construction would essentially depend on largely the risk appetite of the individual. Also, again, the sort of goals that they're trying to attain. You're not saving or investing for the sake of it, right? You're trying to do something with the money. So the goal that you're trying to attain and in how long you're trying to attain that would also prove critical in building or constructing that portfolio for you. And the final thing really would be your outlook on the market. There are years where it seems like there are going to be great opportunities out there. You want to be a bit more aggressive. While there are years where it feels like you just need to hunker down, let the storm, go blow over, and then you can continue. So, you have to look at these factors, look at the individual for you to then be able to construct a proper and fit, portfolio. So this will certainly be on a case-by-case basis.
All right. Speaking about case-by-case basis, because we got a message in from Ben in Lagos who said, so scenario, today, And Ben, I hope you've heard what Efosa had to say, because we're going to need a follow-up message from you. But just reading out the first message he sent. So he said, scenario, today, 11th of January 2023, I have 1 million Naira for short monthly and quarterly returns and long-term annual returns. How best do you advise I diversify and invest it? Is what Ben asked. And well, you've given us that you need some more conditions. Ben, do you want to lose a single kobo? That's our first question. And how long are you looking at this now?
I mean, really simply, there are quite a number of platforms out there that offer you, some kind of safe investment where you're not really making much, right? But at least there's something that is accruing onto that investment on a monthly basis or on a quarterly basis. Those are the ones that one can actually take advantage of. Again, it really depends on, are you trying to put that money away for rent? Are you trying to put it away for some wedding? Are you trying to put it away to buy a car? Or you just are putting it away for the sake of putting it away? So all of this would really matter in determining how best you want to sweat that money, what kind of risk you might be willing to take, and all that kind of stuff. So yeah.
Professor, don't worry. Ben is typing. He will be back to let us know what's what.
Most definitely.
No problem.
Yeah. So before we get Ben's follow-up questions, I'm resuming now. Looking at okay, you've, as an individual, you've decided, okay, I want to take a risk, or I don't want to take risks. I want to do this. I want to do this. Now, the portfolio mix, how can it be achieved? Can it be achieved alone, or should one actually seek out the help or the advice of a financial advisor on this one?
Right. I mean, I think it's important that you seek out the help of a financial advisor. The financial advisor certainly has a deep understanding and knowledge of the market and how things work. A lot of times people don't really know themselves in terms of what they can stomach or not. I mean, I've had instances where, clients are saying that, oh, they want to take all the risk that they can. And then once, the value of the investment starts to drop, it's something else completely. Then they tell you that, oh, they weren't willing to take this sort of risk. And you've also seen situations where, it's the opposite of that. So an advisor would help you reveal yourself to you in terms of what your investment preferences are, because a lot of times you don't really know, you're not clear. It's a very different scenario when you're trading simulations and, your portfolio drops. It doesn't really have any bearing on you. It's different from when the balance in that account drops from 1 million to 900,000. It's very different. So an advisor would help you go through the motions of understanding how you are able to stomach that sort of risk and what the best portfolio construction would be for you. Now, there are some people who are quite knowledgeable about the markets and all of that, but I think that having that advisor provide some sort of perspective or divergent views or opinions also helps to create a very robust, portfolio. Because another key thing in terms of setting up your portfolio and also managing money is risk management. Everybody has an opinion on what's going to happen in the market. Everybody has an opinion on where the stock is going to go and how this bond is going to perform. But most times, no one has a plan for when things go left. Because in investments, there's really nothing guaranteed. So you could do all of your analysis, all of the numbers look good, they stack up nicely, and then Russia invades Ukraine, right? What do you do? So it's important to have a really good risk management framework, and that's what an advisor will certainly help you do.
Tell me about it. That vision just dealt with a lot of people.
Just came out from
So
left field.
what I'm going to say, because people are like, "Oh my gosh, Russia is invading Ukraine," and I was like, "Oh my gosh, Russia is invading Ukraine. Why?" There are different levels to the crime.
For different reasons.
Meanwhile, Ben has sent a follow-up message. He said, "I'm a low risk appetite person. Thank you."
Exactly. So I mean, you can just, there are a number of money market funds out there that you could just plug this into. We just ensure that you have, nothing fantastic, but steady returns. That $1 million is always going to be there whenever you need it. So yeah, you can explore, the money market funds that are out there. It would help serve your purpose, particularly because you're risk averse.
All right, now, so let's say that the person, our potential investor, takes a plunge and seeks out the services of a financial advisor. Would you then advise this person to continue to follow the markets? Because just because it's with a professional, does that mean that they can hands off and be like, okay, everything's fine. My eyes are closed, but the money is growing. Or should they be watching?
You still have to keep an eye on it. I mean, you're certainly probably not going to be watching it every day, but maybe every week you just want to get a sense of how things have moved. Every month you want to see how things shook out and all of that. You really can't completely just take your eyes off of it, right? So I think it still behoves on the individual to still keep tabs on what's going on with the markets. For instance, if you're invested in a money market fund, for instance, it'd be nice to get a sense of where yields are at, treasury yields, how they're doing. It will give you a sense of the sort of returns that you expect to get. It will also give you a sense of what risks could lay ahead for you in terms of you achieving those, investment objectives that you set for yourself. So you absolutely should continue to keep an eye on it, but not certainly as deep as the advisor would, or not certainly on a daily basis.
Okay. So, for example, I just want to bring a scenario as like Ben. I too like scenarios. So, for example, I'm trying to think of something that went low because of Russia, Ukraine. Let's say the investor has their financial advisor who's putting their money into the different investments for them, and the advisor has made an investment in, I don't know, something.
Right.
Let's say wheat, but in this scenario, wheat is going down. So in wheat, and Russia invades Ukraine, and then wheat prices start dropping, even though they went up. But would the financial advisors whose move is it to kind of talk about where the future for that investment would be? Is it for the financial advisor to reach out and say, okay, so we've made this investment and it might go down, but we're thinking long term it will go up, so let's just stick with it? Or would you expect the clients to ask, hi, what's happening with wheat? What's going on with my money? What do we do?
Right. So as fiduciaries, you essentially have that duty of care to the clients to reach out. I mean, at Sankore, we had a call on the whole invasion and basically just dimensioned to clients how we thought things were going to shake out, how we thought it would affect their portfolio, what they should be doing and how they should be thinking about it. So obviously the advisor should handhold the clients through that experience. Even when there isn't anything major that's going on, it's important that the advisor is able to provide perspective to the clients on, how things have performed, more importantly, what you expect down the road and all that kind of stuff, and how the portfolio might want to be constructed to take advantage or try to stay protected against whatever vagaries that you see down the road. So that certainly behoves on the advisor to do.
Okay. All right. Now we're at the beginning of the year. December is over. Some people don't have the money, but they're still thinking about investing for 2023. Would you say that now is a good time to begin investing and saving?
Anytime is a good time to actually begin investing and saving.
Yesterday is a good time to begin, huh?
Absolutely. So again, like I highlighted earlier, it really depends on what you're trying to achieve, what your risk appetite is. Nevertheless, you should still be able to put money away at any point in time. So there's never a best time to do it. So now is really a good time to do it. At the end of the day, like I said earlier, it's important to seek out an advisor that would give you perspective and be kind of like able to dimension what we think the year would shake out to be and how you want to stack up your portfolio to ensure that you are either taking advantage of the opportunities that are out there or trying to protect your portfolio from the negative impact that we could see this year. So yeah.
Okay. We've really run to the end of time.
But
I just let's put one last question. I think the last question is this: how do you think Nigerian assets are going to fare and perform this year?
This year, I think the elections will certainly have a major impact on how assets would fare. Of course, the sort of budget deficit that we're running will certainly have an impact on fixed income assets as well. FX is a major issue. Inflation also remains a huge concern. But I think the elections will certainly come and go. We've had several cycles of elections, and it comes and it goes. It doesn't necessarily leave any major aftermath, if you will, on the economy like that. So I think what happens with FX, what happens with the subsidy regime in the second half of the year will prove really crucial in determining how investments will perform, particularly in the fixed income market, and the sort of yields that one is also able to get. Obviously, the FX will continue to impact inflation. Like I highlighted, I think that the high base from last year, we certainly see inflation moderate, but by how much really would depend on, the external forces that have to do with FX, the impact of the flooding that we saw last year will certainly kick in, this year, so that's likely to be inflationary as well. So all of that, and also depending on the sort of monetary policy stance that the Apex Bank, decides, to take. So quite a number of variables out there, but I think that it would be one year where you would have to kind of prove your worth and knowledge as a money manager out there. I think it would stack up to be a very interesting year, as a matter of fact.
Okay, we've got tons of messages. So this first one, or this next one is from Bulu, who says, between treasury bills and fixed deposits, which is the best investment at the moment?
Well, so it depends. Like I said, there was a treasury bill auction today. The 1 year paper closed at, I think, about 7.8% thereabout. So for bank fixed deposits, depending on the type of bank, so we've got the tier 1 banks, the tier 2, tier 3 banks. So I think typically for the tier 3 banks, they're able to offer you somewhere around that or slightly better than that. Again, depends on how much you're looking to invest. The higher the volume, the more, or the higher the rate that you certainly be able to command. But I think that treasury bill yields have kind of come off over the last month or so, and they've done that quite significantly, really, coming from about 14% just a couple of weeks ago now to just under 8%. So bank placements might be a bit more attractive at this point. Nevertheless, it's important to remember that as those treasury bill yields come down, they also take down with them those bank placements as well.
Oh my goodness. So let me read this message from Ikedia from Ikeja, who says, Naira assets are far better than dollarized assets. You can't compare the gains of the fluidity of our corrupt institutions to the frugality of foreign markets. Ben should invest his 1 million Naira in my stomach. It will be money well spent, says Ikedia. Whilst EA actually has sent in a number of messages, says, if you want to be rich, you must take risks. My suggestion to Ben is to divide his money, maybe 80-20 or 70-30, put the lower half in a risky asset. You must develop an appetite for risk. EA also says, by the way, the authorities are managing the rates, the way the authorities are managing the rate is affecting the rate performance.
We seem to have a lot of money managers out there.
We do. And Chijioke asks, what kind of dollar-denominated investment can I make or can I invest in?
Well, so there are dollar mutual funds out there, and those mutual funds essentially invest in sub-Saharan African Eurobonds or Nigerian Eurobonds, Nigerian corporate Eurobonds as well, which essentially is the primary underlying asset for dollar-type investments these days. So yeah, those dollar or Eurobond funds out there can provide a really good outlet for you to deploy your dollar assets.
All right. Well, I think we've come to the end. We have come way past the end of the show. Thank you so much. It's been a really interesting one.
Yeah. Thank you so much, Efosa, for joining us today. Efosa Aliyu, the head of investments at Sankore Global Investments. We've been talking about investment strategies with Naira assets in 2023. It's been a pleasure talking to you on personal finance today.
And I'm looking forward to buy, Efosa. You put it in my mind now. Have a fantastic evening. Thank you so much. We'd love to have you on again at some point. So please don't be a stranger. All right.
Sure. Thanks.
Cheers.
Bye.
And that is that for personal finance.